Okay, it's the 23rd of July and it's a Wednesday and we've got about just over 25 minutes to the NY Open. Just a second. Okay. All right. Let's start with the calendar like we usually do. So today, no, not today. Okay, so Wednesday there is nothing. Today is Wednesday. There is nothing. Yeah, tomorrow there is some news, not important news, but today there is nothing. No news today. Um, at least no data-driven news today. So it should be very similar to the last couple of days. All right, let's go up a time frame. Look at the weekly. What's happening? We've pushed up to 3430, right? We were anticipating this move right down from here. That price is pushing up, and it has. We've got to 3430 finally. I think we tapped it yesterday. Yeah, yesterday, NY session. Yesterday, NY session, we tapped 3430. The weekly looks very bullish. We could be pushing to 3450 easily. That's just 200 pips away. We could a little over 200 pips away. We could be easily pushing up there. That is just a $20 changing price, and that's very possible. And after we get there, we're at all-time highs, right? We've just got this wick to fill, and then if we get to 3430 and we start to close bullish, if a 1 hour candle starts, if you see the 1 hour time frame close above 3450, we're very likely heading to fill this wick, right? And this is another 500 pip move up, heading to 3500, and that's all-time highs, right? And that's very likely what's going to happen if we don't have a reaction at 3450 to push back down. All right, we're heading, if you don't have a reaction to push back from 3450, then we're heading up to 3500. Um, all right, let's go to the daily time frame. Just a sec. I always forget to post this. Okay, okay. Yeah, so on the daily, we're very bullish, just like the weekly, we're very bullish. We've come to 34330. We are getting a bit of a reaction at 3430. We can see how price reacted it in the past. Here, then, and we dropped. There was a huge drop here, 1,500 pip drop. Then from here, we dropped also 1,300 pip drop, and we came back again, and we also dropped a 620 pip drop. I'm referring to the initial drop before the pushback, right? So this one straight down 1,600. Then this one 1,400, and this one 638. So we might get a bit of a retracement here. We might get a retracement here. Now we can get rid of this. Can get rid of this also. Don't need to have those lines. We've had them for about 5 weeks. Yeah, so we should have a bit of a pullback, and then let's see if there's bullish volume. We could continue higher for the rest of the week. It's midweek, so we could be looking at the retracement today because it's Wednesday. Let's go to our trading chart. Was there a trade yesterday? Yes, there was. I didn't take it. I was it was the end of the stream, and then after that I walked away from my chart. I got caught up with something else, and I couldn't come back to the chart in time. And there was a buy here. I'm going to explain that buy. Price. This candle This candle closed, this was the NY open candle, we closed about 3,400. This one closed, this one broke the previous high and also closed about 3,400, and this old weekly high that I had marked during the stream, 3403.5. And the next candle broke the high. So if you draw the fib from this candle that broke the high of this candle, that significant candle that closed above 3,400 and 3403.5, from this to here, there you go, perfect tap, optimal entry. The stop loss would be a bit wide, but you could find a place to manage risk maybe at about 40-50 pips, and price ran to where I said it was going to run, 3,430. And now once it got there, we've been ranging, right? So we could have a push down. So that was the buys that was a buy opportunity yesterday. I missed it. I wasn't at the charts to take it. Let's get rid of all of these and start drawing our zones for today. Okay. We have a rally, a base, 5 base-in candles here, and a rally. Right? Let's start with that. Okay, let's take a look at that on the 1 hour time frame, because price has crossed 3,400 here. Yeah, there is this area. Price is just under 3,400. Let's take a look at it on the 30-minute time frame. Yeah, we can bring it up to that. We can bring it up. We can bring it to this and also to that. All of this is a base, right? And then the leg out. So leg in, this would be the leg in candle, the rally, and all of these candles would be part of the base, and that will be the leg out. Let's put the numbers in here, 038 and 360, 337, okay, 7, 038. I'm going to extend this to the right. Yeah, might get a push down today. Might very likely get a push down. Let's see. Okay, so price has crossed. We're hovering around this area. We've created supply here. These are 2 demand levels. That's plenty. We don't need to look at any levels below that. Price, that's plenty of place for price to drop if it needs to. We have a rally, a base, and a drop here. In terms of supply, we can extend it. We can draw it, extend it to this rally base drop. Let's take a look at it on the 1 hour time frame, because we have crossed a weekly SR level. And when we do that, I look at the lower time frame. Let's take a look at the 30-minute as well. 30-minute is messy. Stick to the 1 hour. Yeah, I think that's good. Yeah. A rally, 7 base in candles and a drop. Rally, base, drop. Um, this open is 731. Okay. And further to the left of that is this zone. We're getting very close to it. Just about 350 pips to get to it, and then is all-time highs. Once we get past this zone, we're heading to 3,500 all-time highs. It's just all-time highs. Once we get past this high, we start to close above 3,450. Like I said, you see a 1 hour candle close above 3450. And after price breaks that high, then we're very likely pushing up for the rest of the week. Let's just extend this to the right. Okay. We've had this level drawn since April. Price pushed all the way down, right? 3,000 over 3,700 pips. That's $370 change in price in gold, right? 370 over $370, and then now it's pushed all the way back, came down, and now pushed all the way back, trying to come back up to the 3,500, the magical number of 3,500, where it pushed $370 down. Okay. Right. Now, we have one new demand zone. That's all we have, a single demand zone. Let's just take a look at this area. I wanna take a look at this area. Just there. Why price broke here? Yeah, there is a zone there. Let's look at the 30-minute, it'll be clearer. Yeah, there is a zone there, but it's I don't need to mark it. I think price is going to very likely come lower. If it is coming down, we're going to come down to these. We're going to come down further down. Yeah, there is no real reason to mark that. 3403, is it? No, it's not. 3403 is here. Yeah. We don't need that. Okay. So this is 4-hour demand. So let's take a look at this area and see if it's a high liquidity candle, if it's a high liquidity zone. On the 1 hour time frame, have you taken out? Yeah, there is a, I mean, we can look left as well, but yeah, we've taken out these highs here. It's even obvious on the 1 hour time, on the 4-hour time frame. Yeah. Price took out this drop, all of this base and drop with this one single candle. We took out all of that, right? This high, this high, this high. So that's a high liquidity zone. . All right, next. Let's see if we have a, we're going to take a, I'm going to take a look at the high liquidity candle here once more. Um, in fact, let's do that now. Let's do that now. Let's take a look at this high liquidity candle. Let's see how it's marked. We had marked it, I think, several weeks ago, so it's good to take a look at it again. What's it based off of? 30-minute? 165, that's bigger. 206. Let's take a look at the 15-minute. $160. Yeah. Let's go to the 5-minute. $72. Yeah, 5-minute is good. When was this? 13th. June 13th. Was there any news, major news event on the 13th? No, there was nothing. No news, no news. Let's take a look at the 1-minute. Why is 129? Yeah, five is good. 5 is good. 997,693. Okay, good. And the one above, let's take a look at that one as well, since we're here. That's way back. That's way back. This goes all the way back to April. Yeah, April. We had drawn it in April. $214 pips. Let's take a look at it on the 15-minute. I don't think we have data going back that far back. April. Oh, we do. I do. Yeah, 15 is good. There is this 198 pip candle. Hmm. Yeah, there's this one right here. 069 468. April 22nd. Do we have data on the 5-minute? Maybe not. Oh yeah. Yeah, 15 is good. 15 is good. So after this, above 3430 is 3450, and then there is a liquidity candle there, and then there is one just above that as well. If there's a lot of bullish volume, we're going to go through both of them, head to 3500. Okay. Yeah, we've got about 5 minutes to NY open. Okay. Let's go to the 15-minute chart and take a look at the Asian, what price did in the Asian and London sessions. Let's look at the market open. Here, this is where the market opened, right here. Just a second. This is the market open. Market opened at 34.3275, 34.32.75. We opened in the liquidity candle and right at 3430, right? Perfect. So what happened is, so let's start with the highs and the lows. What is this? 315, yeah, perfect. It's obvious. Eight eight two. Nine six nine. Okay. All right. Let's take a look at what price. Take a closer look at what price did. So the market opened here. We were very bullish, right? Starting just at pre-NY. We started at pre-NY and price just pushed all the way 430 pips and then another, yeah, about 460 pips, right? Just with one pullback, and I missed this trade. I had ended the stream somewhere here, I think on this candle. Um, and then I had just gone for some personal work, and I was meant to come to the chart. I meant to come to the chart in about 30 minutes, and I got held up, and I completely missed this trade. I had drawn the fib, and when I came to the chart, price had already moved. It was somewhere here, and I didn't want to move. Lost about 60, 70 pips already. I mean, prices had moved away 60, 70 pips away from my entry. So I was not willing to chase price. I don't chase price. Anyway, we were very bullish. We got to 3430, within the NY session, and then we just ranged at it, and there is a liquidity candle there, so we ranged at that liquid inside the liquidity candle and at 3430. The market opened here. We're still inside the liquidity candle. We pushed a bit further, deeper into it, created the Asian high, and pushed straight to 3430, closed below it immediately. We tapped it. We pushed back to tap it and came straight down to the EMAs, and that's where we created the Asian low, right? Formed 30-minute support there. There we go. Formed 30-minute support there and pushed back to the liquidity candle. Then grab liquidity, push straight past the Asian low and below the first EMA to come down and create the London low, right? Form 30-minute support again there, right there, and pushed back up to the liquidity candle and towards 3430, but we didn't touch it, and we created the London high. We rejected the liquidity candle again, pushed back down, came very close to the Asian low, formed 30-minute support again, right there, and then pushed back to the London high and 3430 this time and closed above it. The next candle closed above. We ranged there for a bit and then immediately rejected the London high and closed below. We formed 30-minute resistance there as well. 30-minute resistance, and we rejected and closed below. We closed above, not rejected. We closed above and then stayed there for a bit and then closed below, right? So we didn't reject the London high. We rejected the liquidity candle and pushed down, not the London high. We closed above, stayed there for about an hour, and then closed back below the London high and 3430 and pushed down. Now, what's likely to happen? We formed 30-minute support. We're rejecting the London. No, we are not rejecting London low. It's the Asian low. If we form 30-minute resistance here, this is support pre-NY. If you reject the London high, we haven't rejected the London high. Good point. We haven't rejected the London high because this is a close above the London high. Price stayed there for an hour, and this is a close below the London high. We rejected. What we did reject is the liquidity candle. We grabbed liquidity from it to push down. But when price pushed down, it did not take out these lows. Yeah, it did not take out these lows. So if it took out these lows, then we can look for another rejection, a 30-minute resistance, and look to come down. But price didn't take out these lows, the Asian lows. I should have done it, and then we could have looked for sells. So what might happen is you might get a deeper move up. You might get a deeper move into this because we've not taken out these lows. If we did, then I would be more comfortable to look for sells from here if we reject. If we form 30-minute resistance, rejecting the 34, basically the London high and 3430 are the same level, same price, right? So I would have been comfortable taking sells here if we form 30-minute resistance, if we had broken these lows, right? This low, at least this low. If you had broken this low, yeah, then I would have been comfortable taking it, or maybe even this low. But we haven't, have we? What's this low? 058. Oh, we have. We have taken out this candle low. Let's look at the 15-minute. Yeah, we have taken out this candle low. Been better if price had taken out the swing low, but we have taken out this 30-minute candle. This 30-minute candle. This 30-minute candle low, we've taken it out. This one pushed to. This was the reason price pushed deeper in. We've taken out that low. Yeah, we can look for sells if we form. Two things can happen here. Again, I'm going to explain the two things, and I'm going to be waiting. I'm going to be watching for either of them. 30-minute resistance forms here. We reject the London high and 3430, and we anticipate price to come down, right, to this Asian low towards the second EMA, because we've already come past the first one. So we're coming down here. right? That is one scenario where we form 30-minute resistance, we reject 3430 and the London high, and we drop down here. I look to take sells to come down. The second one, the second scenario is price pushes deeper in, um, breaks the liquidity candle high, and then we look for a pullback to take the buys to go up to 3450. Those are the two scenarios, right? I'll say that again. First scenario, we reject 3430 and the London high, form 30-minute resistance here to push down to this EMA, and possibly if there is more bearish volume to push down further. The second scenario is we continue to push up, fill this wick. If you look at the 4-hour candle, there should be a wick there. Yeah, there's a wick to fill there. And the second scenario is more likely right now from what I see. We fill the wick, we break the liquidity candle high, which is this high right here. The high is basically 34.40, right? We break 34.40, and then we get a pullback on the 30-minute. We break 34.40, this high right here, then pull back on the 30-minute. We get a pullback, 30-minute support form, and then look to take the buys to go up to 3,450. Those are the two scenarios, right? I'm going to be watching for either one of those two scenarios today. All right, we've got about 24 minutes for the candle to close. I'll be back in a bit. There's a lot of time. I'm waiting for the 30-minute candle to close because I need to see if price is going to reject this and form 30-minute resistance or not. Or are we going to just pull back, create a bottom wick? There is no bottom wick on this candle. So we're going to come down, break this low, create a bottom wick somewhere here, and then continue to push higher for the second scenario where we break this high and then wait, we get rid of the liquidity candle. We can delete that this rectangle, this dark pink one, and then wait for the pullback to create support and for the push up, right? Those are the two scenarios I'm going to be watching for today. Just a second. That's an old weekly high. And then it's 3450. Once we get past that, it's 3450. This 34.75 is basically this one, this high here. There's a weekly high there, right there. All right, I'll be back in a bit. Okay, we've got about 16 minutes still for the candle to close. Let's see what happens if we get a rejection here and we try to push back down. We reject the London high. Let's see, we'll have to wait for a 30-minute candle to close. Wait a minute. Yeah, we could take sells here. Yeah, we could take sells with stops above there. I'm going to take sells here. We'll take sells with stops above here, anticipating price to come down. Yeah. The reason for that is price. This 30-minute candle is before pre-NY, but we rejected 3430 and we closed below, and the next one broke the low. So that's the reason. This high is 141. This low is 115. And I've got a hard stop. My hard stop is going to be above this high, swing high here. So this high, and we've also taken out this candle low. That's the reason I'm looking for sells to come down here. Yeah, let's see if we can get there. Stop loss above this 33.85. We'll find a place to manage risk as well. 33.85. Yeah, it's 9 pips. That's okay. Yeah, and his price is coming down. Let's see if we can get to this low here. Let's take a look at it on the 15-minute. Yeah, this one right here. 34.18. 34.18. See if you can get there. In terms of risk, areas to manage risk, let's take a look at the 15-minute time frame. There's this 3430 is an area to manage risk. 3430, yeah, 3430. Let's look left. 3430. Yeah, 3429 or 3430. Yeah, that's a perfect place to manage risk. And then maybe also 3432. 3432. 3432. Yeah, 34. These are great areas to manage risk, to reduce. 3429, 3432. 3429, 3430, and 3432. Right? All great areas to manage risk. Hard stop loss is there. That's about 50, just under 60 pips. Anticipating price to push down here. It's about 100 pips. Then further down here, in fact, 3416 is better. Yeah, 3416. It's about 120 pips. If a 15-minute candle closes above 3430, a 15-minute candle, right? If it closes above 3430, I'm going to start to manage risk. And then obviously if you break the 3432, I'll manage risk further, and then that's my final stop loss. So I'm going to use these three levels, 3430, 3432, to manage risk. So if a 15-minute candle closes above 3430, 15-minute bull candle closes above 3430, I'm going to manage risk. And if you break 3432, the high, then I'm going to manage further risk, and I'll probably get out. I'll get out here 3432. So my stop loss is actually about 34, under 40 pips. It'll be on average under 40 pips. We're dropping now. We're dropping. This would have been a perfect entry here, the sniper level here. I explained why the fib is drawn like this. I'll say it again, the 30-minute candle, once we did the analysis here of the London high and the, of this London high, price closed above, it didn't reject the London high, right? I said that several times. This is not a rejection. We closed above. And then this candle came deeper into liquidity. And then from liquidity, we decided to form 30-minute resistance and to push down. So this is a clear decision to push down, and that is why that's a large candle. That's a 93 pip 30-minute candle, and that candle tapped 3430 and closed below. This next 30-minute candle broke the low, so I drew the fib from this low to that high. This is the swing high on the 30-minute time frame, so that is why my hard stop loss goes above 34.33.85. This is not a place to manage risk. This is a place where I get out of whatever that's left of my trade. This is a hard stop. Everything goes out here, right? I'm not holding anything. These levels here, 34.29 or 34.30, 34.32, these levels are to manage risk, right? Where I take off partial positions, I fade out. I basically scale out of the trade. when price starts to go against me. And what do I mean by that? On the 50-minute time frame, if I see a 15-minute candle close above 34.30, or even if it closes above 34.30, then I'm going to probably take off 50% of my positions, right? Yeah, so that's about 20 pips. In drawdown, I'll take out about 50% of my positions. And if price breaks 34.32, that high, if it breaks that, if it goes above, it doesn't need to close above, but if it breaks 34.32, just goes above that, then I'll close another maybe 30% of my positions. 30-minute candle is going to close in about 6 minutes. Still plenty of time. It needs to close bearish, right? It needs to close bearish for price to continue down. We've come deeper into this EMA. We've come deeper in, so that is why I'm anticipating for price to come to the second one, which is around the Asian low. That's where we should be heading. But if we get there, let's see, there's a long way for price to go to get there. It's another 90 pips, 80, 90 pips for price to get down here. These are areas, these blue lines are areas where I would look to take partial positions on the way down. Any questions on anything, on the analysis, anything that I've posted, you can always drop a message in the chat. Yeah, I would have been more comfortable if this low took out this swing low. If price took out this swing low and then pushed back, it would be better. It would be really better. That is why I'm still going to be watching this trade very carefully. If it comes, soon as we start coming up and start forming, 15-minute bull candles start to close, I'm gonna close the trades. I'm gonna close positions because we haven't taken out this swing low. We've taken out this 15-minute or 30-minute candle low here, but we haven't taken out this swing low. This swing low is what got price up there, and that low hasn't been taken out. So if price comes deeper, I'm going to be watching it to take out, to start to close partial positions. pushing back up. 30-minute candle is closing now in a few seconds. Should close bearish. Should close bearish, but could come deeper in price. Good. Let's see. Let's see. We broke below this. We closed, form resistance. We didn't tap this again. I think price will probably come back to tap 34.30. Place a pending order right there. I think it'll very likely come to tap 34.30. Let's see. I'm going to be watching the 15-minute time frame anyway. For a 15-minute candle close above 34.30 to manage risk. We could be coming up. We could be coming up to 34.30. Anyway, I got my risk management plan in place. We come to 34.30. 15-minute candle close above that, 34.30. Or even a 15-minute candle closes above the London high, I'll still close a few positions to manage risk. That is, managing risk is the most important part of a trade when it's active. That's the most. It's not your TP levels. You can have shorter TPs, longer TP levels. You can have one TP level. You can have 5 TP levels. They're all good. They're all important. But managing risk when price goes in drawdown is the key to staying consistently profitable. You've got to always find a way to keep your losses smaller. If we break the low, 422. No, not yet. Still 422. Once we break the low, we should be good to come down here. Should be good to come down to 34.18. How far? It's slow. It's slow. We're ranging here. Ooh, we're range. We're in a range. We've been in a range for a while. We're back in this range here. That's one range, and below this is another range. And in this range, price has been here for 1, 2, 3, 4, 5, 6, 7, 8 hours. Went up, came back 9, 10, 10 hours. Now this is the 11th hour. Are we going to break this range, close below these candles, break these lows right here and head down? Or are we going to go back and trade into this range here? I'll show you guys what I mean by the range. Yeah. So is price going to stay below this resistance and come down to the bottom of this range? If it does, there is a chance that price could break and come down further with momentum. Or we're going to trade back into this range right here. Yeah, that's better. Needs to stay below this resistance to come to the bottom of this range. If we come to the bottom of this range with volume and we close below here, then we could come down to this. Let's see. Right? Is that clear now? This is one range. Price stayed above between these two, this resistance and this support. Once we rejected, then we closed at it, then we broke the high, and then we stayed here. Right? We ranged here. Then we closed below, and then we ranged here in this area for a while, for about 7-8 hours. Then we broke above, and we went to the second one, to the one on top. We rejected, and we came back down to this range. And then we sneaked up again and closed back below. We broke on the low. We should be coming to the bottom of the range, right? We don't want price to close back up and then hit back to the bottom, up to the top of that range, the top of the next range, then we're in drawdown. And that is why I have these levels to manage risk in case that happens. Since we've closed here, we closed below, want price to come down to the bottom of this range. Then we have another close, hopefully have another close here at the range, at this support here, to continue down to this range. I'll leave these on here for now. Pushing back up again. 15-minute candle is close to doji, right at that resistance. We break the high, we're coming up. I'm going to manage risk. We break this high, then we're coming up. There's no volume. This week, I was expecting this. I said this right yesterday and day before as well. There's no news this week. No data-driven news week. This is not data. This is not data-driven news. There's a lot of uncertainty in the market right now. I spoke about it yesterday. Expecting inflation in the U.S. CPI and PPI data wasn't that good last week. Trump is trying to push Jerome Powell out, and then the tariffs. There are issues with the tariffs as well, right? So all of these are creating a lot of uncertainty in the market, and that's possibly why price has been pushing up the last couple of days. We pushed in the New York session on Monday. We pushed Tuesday even higher, and now we've come to an area 3430, an important level where we might get a pullback today, being Wednesday, and then later on a continuation up. We might get a pullback here. You can see price pulled back whenever it came there. So first time, second time, third time, and now we're here the fourth time. We might get a bit of a reaction to come down. Okay, I'll be back in a couple of minutes. running about 55 pips at the moment. Let's see. Trying to get down. I'm waiting for this 34.18. It's about 100 pips. 34.18. We should get a reaction here, but I'm anticipating volume to break this low. Once we break this low, we're good. We should continue down. It's another 20 pips, 22 pips away. So break this low, we're good. Should come down to the bottom of this range. I'm going to be here for another 5 minutes. 150 pips if you can get up here. If you can get down here. I think we're going to have a pullback probably with the next candle. Very likely. Very likely going to have a pullback with the next candle. Because we're in a range, and I'll tell you why I say that. I say that for several reasons. One, we're inside this range, right? I've drawn the resistance, I've drawn the support. You can see how price, whenever it comes to the bottom of the range, it pushes up, right? Every time it comes to the bottom, towards the bottom, pushes up, comes towards the bottom, pushes up, towards the bottom, pushes up, down, pushes up, right? And that's where we're heading. We're just a few pips from the bottom, about 10 pips away from the bottom. So that's one of the reasons why we're going to push back. The second is, I think price is very likely going to come back to 3430. We're going to come back up there. Let's see. But I'm anticipating a push up. So if you took the sells, and you want to take some partial positions around 34.21, you can do that because we're coming to the bottom of support. There we go. We're coming to 24.22 tapped, 24.21 next. Did anybody take these sells on the stream with me? If you did take the sells with me, then just let me know in the chat. I'll very clearly explain why I took the sells, the entry, stop loss, TP levels, risk management levels, everything. So here's what I'm going to do. In about 5 minutes, I'm going to end the stream. I'm not going to be here till NYC Open. I said this yesterday and day before as well. This week is, there's not much happening this week, right? There's no major news events. So next week is a busy week, right? Next week, I'll probably, try to stream the entire 2 hours. But this week is not, there's nothing major happening with data related news events. There we go. 34.21. Right now we're getting to the bottom of the range. So if you want to take partial, if you're in sells and you want to take out 20%, 25%, you can do that. 25, 30%, that's fine. We're running about what, 70, 80 pips right now. 80 pips. 80 pips, yeah. Running 80 pips right now. There we go. We broke the low. Right? We broke the low, but we tapped support. So 4 minutes, 5 minutes of the candle to close, I'm anticipating a pullback here. So if you want to take partial positions, you can do that, right? This was what, about a little over 80 pips, yeah, 80 pips here. This is support. It's a lower time frame. It's a lower time frame support. I'm anticipating volume to continue down because this is uh, the NY session for us to have bearish volume to continue down to this EMA right here, and that's where my first TP level is 34.18. Anyway, what I was saying is I'm going to end the stream probably in about a couple of minutes. I've shared everything in detail. I've shared why these cells were taken, uh, what's the reason for these cells. The setup was the reason, the setup, the fib was all explained very clearly. Where the entries were taken was explained clearly. Risk management levels were explained very clearly. Stop loss, the hard stop loss level was explained. Why the hard stop loss there? Because that's a 30-minute swing high. At the time of entry, that was a 30-minute swing high. Now we are forming a 30-minute swing high here as well. So you can bring your stop loss down to this. Then you'll have a lower risk then, just under 20, about a 15 to 18 pip risk. If you can bring it under this swing high, right? We've taken out the low and we have a swing high here on the 30 minutes. So you can bring your stop loss there. Now you have like a 15 to 18 pip stop loss after this candle closes. And TP levels were explained why the TP levels are there. So if price pushes back up, these are the levels I'm going to manage risk, right? All right, I will end the stream in a couple of minutes. All right, let's wait for the 30-minute candle to close and then I'll end the streams. We should continue down. See how the 1 hour candle is going to close. Yeah, we've broken the low. We're closing bearish. Yeah, we should push down. Did we break this high? Let's look here. No, we didn't break the high. I still a 1 hour. You got to be careful. We haven't broken the high and there's no top wick here. Let's see if we can break this low. Break this low here. Just a bit more. 5 pips to break the low. Okay, this is the 30-minute candle close. We might get a pullback. Keep in mind, right? We might get a pullback because every time price comes to the bottom of this support, price pushes all the way back up. So keep that in mind. All right, that's the end of the stream. I'll be back. See if we can. Oh, we closed below. Oh, beautiful. We can come down to TP1. Let's see if we can get there. We came close. We came close. I'm going to close some positions. Close some positions. All right. Anyway, we'll be back tomorrow. I'll be back tomorrow 7:30 a.m. EST, and then we'll do our analysis and see if we have a setup for the first 2 hours of the NY session. There we go. Tap TP1. Perfect. Right. Done. Done. There we go. Coming down to TP2, 34.16. Beautiful. So 109 pips. 34.16, 34.13. $160. $160. Brought my stops to break even and gonna let this run. Yeah, perfect. Wonderful. Great trade. Came all the way down here. 34.16 and then 34.13. We've tapped the EMA. That's exactly what I was expecting. That is why I had my TP at 34.18. That was a great trade. That was 110 pips. Yeah. All right. Hope you guys caught it. If you didn't, then let's see tomorrow. Take care. Have a great rest of the day. See you guys tomorrow, 7:30 a.m. EST.